Hey everyone, so in this section we are going to map 15-minute structure. We're going to do a little stretch that is bullish and a little stretch that is bearish. So we'll start here on April, 21st? And we'll probably carry on till somewhere in July. And I think that by that point everyone will have a good idea of how it is we use this market structure to help us get on the right side of things. The next video will go in a little bit more detail of how exactly you can use the time frames together. So if we're just looking at this here, this would be our lowest point here. And ultimately, when this low gets taken, we have new 15-minute structure. So now what we can say is this is the absolute highest point here, and we have a bearish push to all the way down here. Now we do have a little bit of a pullback. With the 15-minute, you're going to want that 10-15 pip pullback. In a messy area like this, if I don't need any extra structure, I won't map any extra structure. Let's see what this is. So this is right around that 12.5 pip range. We can class that as structure. If you didn't want to and you wanted to classify this as one bearish push down, that's totally fine. If you choose to lean closer to the 15 pip, that's fine. If you choose to lean closer to the 10 pip, that's totally fine. Myself, what I'll do is I will lean whichever way I have to and give myself extra structure where I need it, and I'll stop myself from having extra structure where I don't need it. And you'll see with the 15-minute, you can get into some pretty messy areas. And ultimately what happens is you get way more structure than you want. So this is actually a prime example here. So we have another break here. So if we just quickly look at this here. So we do have a candle break here with a candle body. So this would technically be structure as this body broke this low. Now again, if you're not sure, just measure the pullback and see how big it is. In this case, the pullback is only 8.5 pips. So we will not class this wick as structure. We are going to go right down to the bottom and class that as structure. Now we have a momentum change here, as well as a change of character, and we'll talk about the change of character in a different video, but it basically means it's our first signs of a trend change. So here, once this high goes, we're going to be looking for our first bit of structure. Depending on how long this doji is, you may choose to classify this as structure, you may not. 8.5 pips, so that's not enough to be classified as a pullback. So we will go right from the lowest point, which is down here, all the way to the highest point, and we'll class that as structure. Now obviously here we definitely have enough of a pullback. That is the lowest point. Once again, we take the high here and the bullish momentum continues. We don't really have any significant pullback here, so the push continues right on through. We do end up becoming unconfirmed bearish here for a short little while, and just to become bullish again, just to become bearish again. And with 15, this is very common, and this is where we will use changes of character and higher time frame market structure to stop the confusion. So once again, we have the high, we have a low here. Now if you wanted to move this dot over to this section, because these are higher points than the points over here, you totally can. Once again, we break structure here. And with 15, like I said, it's totally normal to have a messy little bit of structure. Now this first little area here is probably not enough of a pullback to be classified as structure. So we'll just go ahead and map this section as structure. And ultimately here we just became bullish again, just in time to become bearish again. Now this may seem confusing to you at this point. When we connect all the dots together and talk about the why, it'll make a little more sense. It's not as bad as it looks. And ultimately you're always trading in the direction of the 4-hour time frame, which is pro 4-hour time frame. And if you're trading the pullback, you're always anticipating that the pullback is going to be a shorter trade. And as long as you can keep thinking like that, it shouldn't be any issues to know when to stop trading. So for example, just looking at the little bit of structure we mapped, you can anticipate that the pushes up are going to be longer, the pullbacks back are going to be shorter, pushes up are going to be longer, the pullbacks are going to be shorter. So anytime we are counter 4-hour trend, you can expect the pullback to be quite a bit shorter, and we'll manage a little more aggressively, meaning that we'll be looking to take profits at the first demand and supply zones rather than running the weak highs and lows. And if you don't know what any of that stuff is, don't worry about that. We'll be talking about that later on in the content coming up. So here we once again become bullish. Now, depending how big this pullback is, I don't think it's quite enough, which it's not. This pullback here still not enough, so we're probably going to go all the way up here, as that's the first any real decent pullback. So you're 12.5 pips, that's borderline. I'll class that as structure, no problem. And what we're looking at here is a continued bullish trend. Now anytime we're in line with the higher time frame trend, you're always going to be looking to run the highs. So in this particular case, once this first high goes and you do find something in here on the lower time frame as an entry, you'd be looking to run these highs because we're expecting the bullish trend to continue. So your near term target would be to run that at a bare minimum. So down here we do wick below this wick here, but as everyone can see, we don't actually candle body close below the wick, so this is totally acceptable. No new structure is created. And we obviously have new bullish structure as we take this high here. Now, once again, our impulse doesn't end till up here. We have a bit of a pullback here. We're going to call this pullback our retracement. So you can see how much longer the bullish trend goes compared to the bearish trend anytime the higher time frame is bullish. And ultimately this is going to help you be on the right side of the market more often than not. And it won't always work out for you, but that's what trade management is for, to keep your losses minimal so you break even instead of taking all the extra losses. So here we are the top of 4-hour structure. Ultimately we get a change of character here when this last sort of demand goes that put in this high. So something in here caused that. As you can see, this supply zone gets mitigated, and ultimately you would take a trade from something in here on the lower time frame. And obviously you wouldn't be shooting for the moon here because this is counter trend, so you'd be pretty content with just being very aggressive with your management and maybe just running these lows, as we definitely know there's some kind of retracement coming, and the premium and discount array will help us with that. But just to stay on topic here, we'll say we had new structure created here. So now you become bearish here. Again, you don't have any real pullback here, I don't think, worth classing as structure. 9.6 pips. It's not amazing. I probably won't class that as structure. It's right on that borderline. If you did want to class this area as structure, you could. It's close. It's close enough to 10, but I don't think we need to in this case. We are expecting this pullback to continue. And a good rule of thumb is we expect the pullback to be roughly 50% of what the impulse was. So if the impulse was 150 pips, we can expect a retracement to be 75 pips, give or take. It's not 100%, but it kind of gives you an idea to what you can expect. In some cases it'll be more, in some cases it'll be less. But I know that if the impulse was 150 pips, that a 75 pip pullback would put us back into equilibrium where fair value is achieved. And that'll be talked about in the future videos as well. So here we become confirmed bearish just in time to turn bullish again. And ultimately we have a flip zone in here, which is basically where your supply fails in here, and you have two areas that could have been the cause. One would be this wick, the second would be the doji below. As you can see, they came back and retested the area that caused the flip. The flip is basically where the bears lost momentum, the bulls took over, and ultimately we'd be looking in these areas to take it back on up as we're trying to realign with higher time frame trend again. And don't worry, all of this will be explained. I just thought I'd go over it as I see it just to get everybody warmed up to it. So here we have new structure once again. We have a bit of a pullback in this area here. And some of you may find this video a little bit boring, and if you don't need to watch it and you think you understand market structure, you don't have to. It's going to take us a little longer to map 15 market structure as there's a lot more of it. And some of you may choose to watch this quite a bit. 15 and 4 hour is ultimately what you're looking at pairing together. Those are your two favorite time frames as a day trader. It's a big enough of a time frame that you are getting proper signals, yet it's small enough that you can use it for intraday. I'm not a huge fan of 5 minute and 1 hour. Like, you can definitely look at it, but your analysis should come from the 4 hour and the 15 minute. Now here we are at the peak of the daily and the 4 hour. So if we just take a quick look at what we mapped here, this was the little bit of a bullish section that we mapped. Here we turned bearish for a daily pullback that we talked about to gather this liquidity, tap into this daily OB just to continue on up. And ultimately, you're always just trying to determine who's in control, supply or demand. So as long as supply is in control, you're going to keep selling. Once supply loses control, you're going to start buying. And the 15 will be the first time frame to let us know who's in control. So we put in a low here. Our first bit of pullback, I would say, would be all the way up here. And ultimately, you have another low created here. Now the impulse to me ends right here. Your pullback would be this zone here. We can just double check that and make sure it's in that range. So that's 14.6 pips. I'm more than happy to classify that as structure. Once again, we take this low. The bearish trend continues. And like I said before too, you will find 15 minute a little bit over the top sometimes. And it's unfortunate, but it happens that way. So that's a 19 pip pullback. I don't love it as